Greetings, Ben Murray here with another edition of SaaS Metrics School. Hope you're doing well. So today, talking accounting, ignore your accounting foundation, pay the price later. And I see this over and over with the SaaS companies I help. Accounting data, financial data is data source one of four that I need to create your FP&A process, to create a nice financial process, to create your metrics forecast, etc. But in early stage SaaS, so common to ignore our accounting, and this just causes so many headaches down the road, can be avoided. Even in later stage SaaS, I see this as well. So first, the pillars of your accounting foundation. What do we need to have a good accounting foundation so we can have a nice financial close and have a nice SaaS P&L each month where we're not struggling to understand what's happening in our business? And I see this and I hear this from founders where they say, I'm running blind just because the financials, the accounting is not set up correctly. So, pillar one, revenue categories. We want clear and distinct revenue streams. I want subscriptions separate from variable revenue. I want professional services separate from managed services. Hardware is separate. We need clear and distinct revenue streams so we can understand, of course, the revenue that we're earning. And this impacts then how we're going to calculate metrics and forecast our business. So, clear and distinct revenue streams. Second is our department structure. We need to define the departments that exist in our business now, and of course, those departments that are coming up if we're still scaling. And this gets into COGS versus OPEX. So in the COGS area, do we have tech support, professional services, customer success if they don't sell, DevOps? Maybe we have additional cost centers there based on our revenue categories. I've covered this in other posts and in my academy. Then OPEX. OPEX, this is easy. It's always R&D, sales, marketing, and G&A. So that's our cost center structure where when we're closing the books, every single expense must be coded to a department or cost center level. Sounds hard, but it's an easy part of the close process. So talk to your bookkeeper, your accountant, are we coding every single expense to a department, and do we have the right department set up? Then non-operating. Usually in non-operating, we're going to post interest income expense. I also like just to push D&A down there, depreciation, amortization, keep that separate from posting that, say, into G&A, inflating our G&A as a percent of revenue number. So we have a non-op section then below OPEX. So that's the structure. And this relies on a clean chart of accounts where you sassify your chart of accounts. I've got a post on that at my blog at the SaaSCFO.com. So our chart of accounts. So where we're coding all our revenue expenses, that is underneath our SaaS P&L. So that's also a key part of this process. So just those steps, setting up your chart of accounts correctly for SaaS, department structure, clear and distinct revenue streams, coding employee wages, taxes, benefits to the right departments, sets you on that right path. So we have good, clean accounting data, can create that SaaS P&L. Now, a client example here, real life client example. You could say this is probably the longest sales cycle for me for a fractional CFO client in probably 3 years, because this SaaS client is a very successful B2C SaaS company doing great, positive EBITDA growth and at a decent scale. And the founder took my course several years ago, took that time to set up their chart of accounts, their accounting foundation. And boy, when he came to me, the chart of accounts was great detail in revenue, great detail in COGS and OPEX. The departments are set up correctly, and then makes your CFO life so much easier to then easily create our SaaS P&L. We're not questioning those revenue expenses, not questioning our gross profit margins by revenue stream or OPEX profile. And then that student then actually became a fractional client. So took that time to put the accounting foundation in place and then was ready to scale from there. So again, if you ignore your accounting foundation now, you are going to pay the price later. I see this over and over. I've got tons of resources on this, probably too many links to mention here. And also, I forgot to mention outsourced bookkeepers. You want to make sure your bookkeeper understands SaaS, works with SaaS companies, and I've got a couple referrals for that. So I've got tons of resources, referrals for this. So email me at ben@thesaaSCFO.com if you have any questions or want those bookkeeper referrals who can take over your accounting and they know SaaS, and then I can pass on any other resources. And again, if you find value in these SaaS Metrics School episodes, I'd love a 5-star review and rating. Thanks a lot.